Hello and welcome to another video. This is Callum Thomas, Head of Research at Top Down Charts, and we're looking today at the bull flag on the S&P 500. Now, you'll probably notice first of all that my smiling face isn't on the screen in the corner as usual. The reason for that is that we had some comments yesterday, or no, in the previous video, that suggested or requested that we blow the charts up, that we put them more prominently so that more are able to be seen, and so definitely keen to incorporate that kind of feedback. Always looking for suggestions on how to improve, because this is probably about my 15th video so far and still pretty new to the whole YouTube experience, so definitely keen to incorporate any feedback or suggestions that you might have. So let's move into it. If you weren't listening, you probably have read this already, but let's have a look at the chart. So what we've got here is what we call a bullish flag formation, and the way that these work is that you have this confined ranging little sequence here between a couple of parallel lines. It's sloping against the prevailing trend that prior to the point at which it sort of conked out. And if you think about the psychology behind this kind of move here, it's basically the market starting to lose a little bit of that confidence, or having a bit of thoughts or second thoughts. And there's probably quite a bit of headlines and economic data that could provide a little bit of support for that kind of thinking. And so when you think about this kind of pattern, the point at which this, or the way they talk about the point at which this kind of formation occurs, is that it's usually halfway through what you call the flagpole. And if you think of this as the start of the move, the rule of thumb, measure rule, is that when you get the breakout there, you simply add the lower part of the flagpole to that point, so hence it being at the middle part or halfway up the flagpole, and that would get you to a price target around 24.40, as I mentioned there in the comments. So if we do get that breakout there, and that's an important point to note, by the way, it's not technically called a bullish flag formation until you actually get a breakout. If you do not get an upside breakout, then it is not a bullish flag, then it's probably nothing. So, we still need to see an upside breakout of that trend line there, and, by the day, the bar is getting lower for that. And, of course, on the other side, we have a line in the sand there, a useful little line in the sand. So, these kind of patterns, you don't want to go and have a huge sort of superstition around them or anything like that. They're just useful sort of rule of thumbs for setting trigger points that kind of reflect the psychology that's going on in the market. And once you get a break in those kind of trigger points there, they can help set up an overall case. And so one other thing that I wanted to talk about today before we wrap it up is this chart here. So any of the people that tend to follow me on Twitter, they will probably be familiar with this chart. It shows seasonality for the S&P 500 over that period there, so 1990 to 2016. And the line shows you what the average daily movement is over that period across the various business days of the year. Now, any good student of statistics will know that averages can and do deceive. There are always exceptions to the rule of seasonality, but so far this part of the year here has actually appeared to have worked. Over the long term, you tend to see a positive drift during this part of the year, and that tends to go through all the way to June. They do say sell in May, but that tends to sort of stay with us until this period here. And so what of that is that when I think about seasonality, it's probably almost never something to be the core of your thesis, but if it comes along and adds to something else that you're thinking about, so in this case it's actually quite a good example of that. You've got a potential bullish flag formation here. We're still waiting for the breakout, but when you've got this sort of adding to the a sort of bullish seasonal bias, it tends to give you a little bit more conviction in that. So I guess wrapping it all up, the overall technical view on this one is a bullish bias, but we've still got to see that breakout there. So that's about it for the day. I'll leave it at that. And if you have any comments, suggestions, definitely, as I mentioned at the start, keen to see that feedback in the comments. And if you have any alternative views, more than happy to see them as well and have a bit of discussion in the comments.